Welcome, dear brothers and sisters. This is your Elliot Wave Master Course Intermediate Stage Part 3. In this, what are we going to learn is nothing but your market structures using the concepts you have learned in Part 2. Now, I again repeat, Part 2 is the most important part in this entire intermediate stage. You don't need to learn anything after that. You can just start practicing on your charts. But for some of you require your eye testing. Okay, on charts you need some eye testing to understand what are the different scenarios that can come in the market. Okay, what are the different scenarios? Like I said, reading a chart is very important. Just like, you can't read a textbook and go and learn driving. Similarly, for trading, you cannot read or just see one simple video. You have to do some practice. Okay, so the concepts, everything has been shared in part 2. I again repeat humbly, watch your part 2 as much as possible until you're very clear of what you're looking for. Okay, now this is to demonstrate the structures which come in the market, and it is not easy to understand. Okay, it is not simple. It's not very simple for you to understand if you're beginning the analysis on your own. So what you need is to do some eye testing on the charts. This is what I hope to provide in the next few parts from here, part 3 onwards. Only you will be doing eye testing. All the concepts have already been shared in part 2. That is the most important part in this entire intermediate stage. Okay, so in this chart we're going to look at ABC structures and some impulse. After an ABC, we will look at how the impulse unfolds. So here it's very clear for you. You can see by now, if you finish the beginner stage, if you have finished the intermediate stage part 1 and part 2, you can see this very clearly. This is an ABC structure, right? So in this ABC structure, what is the basics of ABC? We know that the C, right? Even if you leave A, if you leave B, your wave C should at least touch your 1x. Okay, or as per our requirement, we know that 78% onwards, right, we are going to be cautious in the market, suggesting that market can turn anytime. Okay, so before that, very simple, again I repeat, go watch part 2. It'll be very clear to you what we're going to discuss. It's going to be a short series of videos now, only looking at the charts. Okay, so in an ABC structure, we know that price needs to come to at least 78% minimum and go to your 1x if possible. Okay, if it's an ABC structure, it will look to terminate here. But as psychology in the market, what are you thinking? You're thinking that yes, market has reached the 78% mark. I should be cautious now, right? Be careful that market can turn anytime. So what are you doing, right? This is your analysis. You have drawn your price levels. Very, very simple. Suppose you have just marked your price levels of 78 to 1x here, right? You have just marked them and you are ready to watch what happens in this zone. You have removed your Fibonacci. You expect wave C to come till here. So I told you already, you can use your easy method of using price channels. So what are you doing here? This is your A wave, right? So this is your A wave. Again, throughout the videos, I'm not going to teach you how to calculate. You have already learned how to calculate everything. I am going to show you how we are applying them on charts previously. You need some testing, eye testing. That is why very important for you to do eye testing. So I'm showing you different possibilities of different structures which come in the market. Right now, this is ABC, but in the live market, how will you find out if it's an ABC? You can see here, this move in your market, it looks like a 3-wave move. So this 3-wave move itself, you can study each part like this. If you break this down, if you see this channel line, if you break this down separately, this entire move has been broken, right? It has fallen down. So what are you expecting? This to be small a, any A wave in the market. Next is your B, and you expect a move C. So what are you expecting? To reach at least to 78%, at least 78%. I'll show you some parts where you might get confused here. Now, Has it reached your 78% is the question mark. It has almost reached, but it did not reach, right? So your question mark is what is actually happening here? I don't know. So here you can see that what you will do simply is you will wait for further analysis. Here, what do you see in the market? What is this? Another structure forming here. First, I showed you, yes, that this channel broke. So this is one single wave, right? Then what is happening here? This is a form of expanded flat, right? This is a form of expanded flat. You're already aware what are flat structures if you have finished the flat structures in your beginner stage, and you know your wave B can form any structure in the market, right? Wave B can form any structure in the market. So this is your expanded flat. Why? It has broken the upside and it has come and broken the downside also, right? So it has both properties. It is expanded flat. So now you understood, yes, wave B is dangerous. This is why it is called dangerous. It can form anything. So your wave A, this is your wave A, this is your wave B. Now you're calculating wave C again. Okay. So again, let me just show you. So when you do your analysis, back testing and learning, now you will get a different answer in the market. So earlier, if you mark this as A, this as C, you will get a different answer. Now this is giving a different answer. What is it telling you? Yes, it has reached the minimum requirement 1x. It can go all the way to 2x. It has almost come exactly there and then it has turned. Okay. So this is what I want you to learn. There are multiple structures can happen, but for you to tell it for sure, right? For you to guarantee, yes, I know, you have to justify all the waves previously. So eye testing, what did you do? Just blindly, you have put A, B, C here, but now I have showed you a different way using your price channel lines, and then you extended this Fibonacci. It has not even touched your 78%. So this is some question mark. You waited then to understand what is happening. You need more info, right, from the market. So what you do is, again, like I tell you, you don't have to know every time what is happening in the market. You can ask yourself, yes, I don't know what is happening. Let me wait and see what is happening. What is the market going to make? So then if you waited, then you would have understood that, yes, this is an expanding flat correction. This is your wave B. Okay. The most dangerous wave is wave B, right? So very simple. You finished your A, B. Now you're looking for wave C. Okay. What have you done? You have connected this two possibilities like this. Okay. You have connected what? 0 point, your A point. You can also connect it like this. There's no problem. You can connect it like this. There's no harm in this. You're connecting all the possible moves in the market. So 0 and B, you're connecting two lows, connecting to the recent high. You can do this, or you can connect the high of A, no problem. Okay. You can connect the high of this or connect the high of A. Both are valid for you. What are you expecting wave C? Wave C to come at least, you cross this, you have your 78x, 78%, and here, right? Very, very simple. Now, question mark is, how do I know that this fall is finished? I have drawn a separate parallel channel line for that. Very simple. I have drawn a separate parallel chain, individual parallel channel line, right? If you draw this, you will understand. An individual parallel channel line, if you draw, connecting these two lows and this high, what are you expecting? If this price channel breaks, yes, market is making a different move now. Okay. So now you understood there are multiple confirmations you can take to look at the market. Now you know this channel line has been broken and this middle channel line of the major full AB is finished. So what next? You're looking for wave C. You have drawn the what? You have drawn the Fibonacci zones. You're expecting here market can terminate, right? From 0.78, you are careful. Now what next? You have seen the market started to fall slowly like this. Okay, you're seeing the market is starting to fall. You're thinking, okay, wave C is finished. What will I do next? I will adjust the channel line as per the wave. So A here, your C here, then I'll connect it with B. I will extend it further. Second point, what will I do? I will draw a separate parallel channel line for wave C alone. Right? I'll connect this and this. Two highs like this, and the low here. So what is the confirmation now? First is your Fibonacci zone is reached. Then your wave C channel line itself is broken, correct? And then your major wave, entire thing. So by this time you understood, yes, that's a possibility. A, B, C is finished. Your region is finished. So you have drawn a blue color, the major one. You can change the color as per your wish. Obviously, that's needless to say. Here, your channel line middle point has been broken. Okay. So what are you expecting? A wave, new wave to start, right? So here, entire new wave started in the market. You got the confirmation multiple times. So when you are more thorough in your advanced concepts, you will learn you don't need price channel lines. You will use indicators there and some specific time zones in one setup for life. You will have specific time zones, and if there the market is terminating like this wave C type, right? There you will understand, here itself you will understand wave C is finished and there's a big move to come in the market. Okay, so for those who don't want to go to advanced concepts, who think they don't need, you can use these methods. First practice these methods, then go for advanced concepts if you want to learn them. Okay, so here very simple, we have decoded an ABC move for you. All right, it's not very hard, guys, very simple. Now let me remove this. Let's decode an impulsive wave. Let's decode an impulsive wave for you. In this chart, you can see an impulsive wave started here, entire move. All right. How can we break this down? First is your wave one. You have to identify what is the structure. So wave one can make what? An impulse wave, or it can make a diagonal type wave consolidation. Again, in the live market, it is very difficult for folks to understand this kind of move. Okay, in the live market, it is very difficult for you to understand this kind of moves. So it is very simple. You have to wait after your C is finished. You wait for wave one to form, wait for wave two to form, and then play the wave three. This is what professionals do. Okay, they wait, let the wave one be finished, let the wave two be finished, then we'll play for wave three. But what is the retailer want to do? Retailer wants to catch exactly at the top, pinpoint, right? Exactly when the market is going to turn, that is where the retailer want to catch. This sort of inverted N pattern is a HPS. It's a high probability setup. Also, it is low risk. Okay, HPS LR, high risk, high probability setup and low risk setup. Okay, so very simple, guys. HPS LR, this is what we want to focus on in all times. As an Elliot wave analyst, you want to focus on this all the times. So very simple here. You are confused what is happening here. So what did you just draw a parallel channel line. Simple. You don't know what is happening, you draw a parallel channel line. Very clear from this point onwards, market has broken down. So you are in a new wave. Okay, after a consolidation, you don't know where 1 and 2 is. Like I said many times, what the market will show in your textbooks, all of you have learned 1, 2, 3, 4, 5, right? This is what a market will show in a downtrend. 1, 2, 3, 4, 5, happily 1, 2, 3, 4, 5. But this is the reality of the market. Okay, this is why I keep telling you, no matter how many books you read and come to the market, you will not understand it in the beginning. Okay, the moves are totally different from your textbook. Similar thing I keep telling, you cannot read a book and learn driving. It's the same thing with your trading as well. Okay, now you have seen a market breakdown. So what do you want to see here? You want to see 3.1, you want to see 3.2. As a wave 3, what we want to see, we want to identify 3.4, right? So at this stage, you understood there is some kind of wave. I do not understand, like you don't understand it. I do not understand this part, but price channel has broken with confirmation, right? The price channel has been broken with confirmation. So what do I do? Simple. I'll just draw my Fibonacci first. I will not mark the end point of wave 3 because I need to calculate it using your 3.4 wave only. Okay, so you can see here all the textbook says wave 3 can go to 1.618, wave 3 can terminate here, wave 3 can terminate here, but market wave 3 just went crossing all the points. Okay, so never put the end point of wave 3. The style which we follow is very simple. Locate 3.3, then 3.4, then we calculate the move for 3.5. That's all. Okay, this is our style. This is a very safe style and you will make very less mistakes even in the market. Now, here you can see what a possible drop after consolidation, right? Possible drop, pullback, another drop, right? So how do you analyze this? Very simple. First, the pullback, you will analyze whether can it be any form of wave 2. Can it be any form of wave 2? Yes, because it has reached within the 68 to 70% zone. The best possibility is your 50 to 61%. Yes, it is allowed to go even to 90% retracement. Okay, so it came back down, gave a good retracement in this zone. So what am I doing here? Very simple. I'm doing nothing but drawing my parallel channel line to confirm the price action. Right, let me zoom in. I'm just drawing my parallel channel line to confirm the price action. Now, very clear for me from this point here, some wave has started. It has broken here, gave me a good retracement, gave me a lower high, and then it has fallen down. So how am I going to analyze this? I just have to draw another parallel channel line here to identify whether this wave is finished or not. In the live market, this is how you want to think, right? So both these waves are clearly finished. At what point? At this point and this point after a gap down. Okay. Simple question remains, what do I do next? So you have what? A possible 3.1 and 3.2 now. So for calculating wave 3, what you do? You connect all 3 points. You connect all 3 points. What is it? This is your 1, 2, and 0. Okay. So 3.1, 3.2, and 0. Your first already market started here. Okay, now you're looking for a wave 3.3 in the market. So wave 3.3, again, don't make the mistake, just leave it 3.3. You never take opposite direction, you just leave it, let the market go till wherever it wants. Now at this stage, right, at this stage you have left the market to go wherever it wants, and now you are drawing a parallel channel line. You are drawing a parallel channel line to check what is actually happening. When is this going to finish? Right, so this is your 3.3 channel line. So it broke here. Now what do I do for 3.4? Very simple. I'll draw the Fibonacci. I'll expect it to come to at least 38%. You can see this exactly at 38%. It has come exactly at 38%. So this is a possible 3.4. So yes, Fibonacci has given a proper zone. 3.4 has come. In the live market, what you need is you need confirmation. So you will draw price channel line for 3.4 alone. So when 3.4 will break, only then you will know price channel that it is confirmed. You have got your 3.4 wave. But in advanced concepts, we will be able to catch here itself. We will know exactly here that 3.4 is over because we'll be using some specific indicators, and we will know that fourth wave has to come back till that zone confirm. Okay, this is a 3.4, so we'll go use that indicators in the shorter time frame. Anyway, here it is finished. So now what is left? A 3.5 is left for us. So 3.5, what are we doing? We are using a Fibonacci to calculate 3.5. This is the start of 3.3. This is your entire third wave. Now we are using possible Fibonacci to calculate your 3.3. So what do we require your 3.3 to do? We require 3.3 to come and touch minimum your 38%. You can see again It has exactly came to this level and touched. It can go beyond it, no problem, but we need to come and touch 38% minimum. Okay, that is what has happened now. Your entire third wave is almost finished. How will you confirm? Very simple. Just draw your parallel channel line again. You will know that your fifth wave 3.5 is finished here. It has broken the parallel channel line. It has finished. First, it has reached your Fibonacci. Then you have drawn the parallel channel line to confirm, yes, it is finished. When it breaks the parallel channel line, you will know, yes, it's finished. Now, what do you have? You have your entire wave 3. You have entire wave 3. You have wave 1, wave 2 of the major wave, entire full starting. Right? Just redraw this. So now what are you looking for? You're looking for this to break. Why should it break? To give you confirmation of your wave 4. If this parallel channel line breaks, you are confirming that your wave 4 is started. So now this is your wave 3 finished here at this point, wave 1, wave 2, wave 3, and you are entering a wave 4. So when this breaks here, you will get confirmation. First, your this parallel channel line is broken, then this also is broken. Now you confirm that you're in a wave 4. In the wave 4, what do you want to see? You want to see 38% retracement. There are two again retracement. You can take 38% retracement of entire wave 3, or you can take 38% retracement of the full wave. In my case, I usually take for main wave 4, I usually take 38% retracement of the full wave. I have other parameters, including your indicators. I know exactly where wave 4 has to come to. Okay, so in this case, very simple. Wave 4, what did it do? It made a flat correction here. This looks like a flat. So in your textbook, what is a flat? This is a flat correction in your textbook. So what did I teach you in the beginners course? That your wave C in a flat correction, it can extend. So never put a full stop for wave C. You have to study this separately. Okay. So your minimum requirement here, when you understand this is a flat correction, is your 78 to 1x. That is your conservative target. Okay. 78 to 1x is your minimum requirement. People think this is a W pattern. People think this is it is going to go up now market double bottom. You know that this is a wave 4 only. So your minimum target is here, right? After this, if market crosses, everything is bonus. You can see it has gone all the way to 61, 1.618%, right? So what are people thinking now? The bulls are thinking, yes, W pattern in the market. Market went straight up, 61.8%, wave 3, wave dip, buy again higher. Same thing, bears don't know what to do. So you know for sure this is a wave 3. This is a ABC pattern. C can extend. The normal YouTube gurus and analysts, what they say, C flat correction means it has to go only till here. It cannot go beyond this, right? But you know, like I told you, in the market, it will throw out of syllabus moves, right? It is designed that way so that mass psychology does not know what is happening. Mass people, the dumb money does not know what is happening in the market. You cannot read a textbook again. All your gurus will tell this is what this so and so Elliot wave textbook is there. So this is a flat correction. But again, I'm telling you, you will not find all the moves in the market. Like, yes, concepts we are using, but in the live market, it's totally different. Okay, so here, very clear. If you draw, how do I identify the moves here? Very simple. I'm just drawing here one channel line separately. This has been broken, right? This is broken. Next, I'm drawing another channel line here. Price channel, 1 second. Let me draw it better. This is broken now, right? Means this was broken now. This is going up. This is broken. So we are expecting wave C. We have a price target. It did not stop here. It went above it. No problem. This wave C can do it, right? In your flat correction. Now what are we doing? We're just drawing a price channel for this. When this price channel breaks, it's game over, right? C is done. We are going for another fall for wave 5. The major wave 5, major one. This is just fourth wave. It has touched exactly 38% Fibonacci, and then in this zone it has turned back down. So we are in a wave 5, major wave 5. Okay, so what is the rules for major wave 5? We just need to check what is the Fibonacci level now. We need to calculate the minimum requirement of the Fibonacci, that is your 38%. Right? So your 38% for this is minimum here. Sometimes you will notice that 38% is before the previous swing. So we know that it can extend further to break the previous swing. Okay, so you can see here it is nicely dropped below it. And again, there is no 5.1, 5.2, 5.3. It is a straight dump. Okay, so after this kind of straight dumps, what happens? The market turns back up very fast. Okay, so very simple, guys. It is not complicated at all. The only part is you need to understand different market structures. So I suggest you study 5 charts, 5 instruments only. You understand what is happening. Yes, if you come to the advanced concepts, it will be much easier for you. But again, I recommend you understand, you study everything. It is up to you if you want to reach the advanced concepts. But again, study your chart using the concepts you have. So again, just to illustrate the point here, let me draw your extension here. Price level extension. Okay, very simple. Wave 3 is finished, wave 4 and wave 5 will not break the lower channel line. Very, very simple, guys. Okay, when wave 5, you draw the parallel channel line here, it's broken. This middle line of the main entire wave is broken. It's game over. Okay, so you understood how we got your wave 1 somewhere here, wave 2 here, it's completely compressed, your wave 3 here, wave 4 here, wave 5, right? Very, very simple. Don't complicate it. Practice more. Okay, and the other parts, next parts, we'll see your different structures, your triangles, your flats, your WXY pattern, double zigzag, how they are forming in the market. Okay, I'll see you in the next part.